Hello everyone, I hope you guys are having a wonderful day and making some really good trades. And let me just get to the Bitcoin chart here because we are not on the Bitcoin chart. We are taking a look at Monster Energy Drink. There we go. And I'm not even on the Bitcoin chart here either. Oh my goodness, I'm on all sorts of shit coins left and right. Okay, let me just scroll up here real quick before the video begins. And there we go. Today was the CPI day. And you guys can probably tell we had an extremely volatile day. Whipsaw up and down, Bitcoin closing flat on the day, basically back to 27,500. I got stopped out of my trade, which is quite unfortunate, but not to worry. We've made a couple bad trades in a row now, but we're going to make it all back. I am not worried at all. Because over last year, we made over 200%, and it's just a slow start to the year so far. But right now, Bitcoin could be getting ready where it's either a leg up or a leg down. And let's take a look at Market Cipher and see what we can see right here. So right now, Bitcoin is still on a downtrend at the moment. No sign of the bottom in the C wave. It's possible that we may head to 25,000 or even as low as 22,000 before we start to find some major support. Let me take a look here on the 12-hour time frame. You can see we actually tagged the bottom of this band right here actually. But sorry, I didn't want to take a look at that indicator. What I wanted to show you guys was this chart. Once again, there it is. Perfect. Okay, so right now we are still on the, holding this upsloping trend line. But if this level were to break, then I would expect Bitcoin to come back down to $25,293. And if we were to go even lower than that, then I have a level right around 21,400, which is from this pivot high, this little pivot high here, and this pivot low as well. And we obviously did punch through it very quickly, but we recovered it all within 1 week, I believe. Yeah, it was just a weekly wick, and you stopped everyone out, and then you had a moonshot towards the upside. So overall, 21,200, 25,000 are going to be my two major levels. If Bitcoin is unable to hold this level and we end up dropping down, RSI is looking pretty weak at the moment, so I wouldn't be too surprised if we do that. Okay, so just keep your eyes on Bitcoin, guys, and see what happens there. That's going to be a leading indicator for the markets. But at the same time, we have the S&P 500 getting to a point where it's going to run into in my opinion, an instrumental amount of resistance, like right around 4,200. You got this yellow upsloping trend line that dates all the way back from 2012, and it goes, trends. It's still upsloping, and then you got all these rejection points as well, right? Rejection, 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 rejection. And I wouldn't be surprised if you came back up, right, and made a little bit of a higher high, and then you made a lower high on the RSI. Then you got your little bearish divergence there, and then you start to break down from there. So just be careful, getting into huge longs right now. A lot of the big cap tech is lifting up the Nasdaq at the moment, and you can see all the other tech stocks are not faring too well. You're seeing PayPal down more than 10% today. I think Wolf got killed as well. We are in a bit of a Wolf trade as well. And that one was down over 22%. I think it's down 33% now, so it's absolutely insane. So if we come back up on the sorry, not the S&P 500, on the Nasdaq, 13,500 is going to be my major level to get into a short on the Nasdaq. I'll probably use the SQQ, which is a triple short, but we'll have to see. If we push even higher, we could even go to a 1765. But I don't think we're going to be doing that. But we'll have to see. Markets can surprise us. Dow Jones is actually ended up down on the day. It was actually down only 0.9, or essentially flat, but it did not end up breaking higher, and it was just chopping sideways as well. Russell 2000, if the Russell gets a pop to potentially 1820, I will pull the trigger on a short, as we will be retesting the 200-day moving average as resistance, and at which point I think then you're going to get your next leg down in the Russell 2000. Okay, all right, I think that covers it for now. Let me take a look at gold, silver, and oil. Let me take a look at oil first. So oil is actually starting to slow down a little bit, but if you can get back up to $77.21, I would be very interested in getting into a short on oil, as I believe it is going to take its next leg down towards $45. I think the 65 level is going to be breached eventually as the recession fears grow indeed. Natural gas, again, still struggling here. I think we're in wave 1, and if we come back and retrace to the 786 and we are able to hold that level and make a higher low, then I think you could have a very nice bounce level and could be getting ready for some more upside and potentially the third wave here, or you know, someone's gonna call it the wave 4, which is gonna be like a massive wave here. I think it's something like this. Just pull it down for you guys. I believe you got your wave 1, 2, and then 3, and then you're expecting to get a wave 4 and then a wave 5, which is ultimately going to push natural gas to all-time lows, as the recession is going to be absolutely crazy. But I think you're getting ready. You know, you've been consolidating for a significant amount of time. You've seen a lot of significant buying as well. I think nat gas is getting ready for its big pop towards the upside, but we could get one last dump towards the downside before a move up. Let's take a look at gold. Gold is a little bit high right now still. Again, it actually popped up the other day, made a little bit of a higher high as well, and I think gold is getting ready to potentially get it like down to 1713 right here. I don't know why this is red. That's not resistance, this is support now. This is going to be our support levels because gold is so high. So 1913 is going to be my major level that I'm going to be looking at for gold. If it could come back to this trend line right here, I mean, this would be a very steep dump indeed, because we have an upsloping trend line and we got a nice level right here at 1913 as well. But overall, whenever it makes contact with this upsloping trend line, I'm going to be very interested in getting into a long position on gold. I'll keep you guys up to date inside the Discord. And taking a look at silver, silver is still looking weak. I believe silver is getting ready for a dump towards the downside. Potentially 23.94 will probably be the first target, a retest of this this channel that we were in. And if we're able to, you know, hold this as support, then we're going to potentially bounce back up. But if we are unable to hold this level of support, then we are most likely going to go to $22.25. Okay, let me take a look at the hash ribbon indicator on Bitcoin, and right now we are getting very close indeed to a capitulation cross, but we have not, you know, done anything like this yet. Nothing has crossed. We are still in the money. You know, we're still good for the time being. And you know, the hash ribbon buy indicator was a great signal, and it was up 55%. But right now, you know, if we don't, you know, recover this anytime soon, it may cross, and it's possible that we could get a dump towards the downside. So please, please, please take that into consideration when you're making your trades. Taking a look at the daily time frame here, yeah, you're starting to droop down below the EMA, so that's never good to see. But we'll see what Bitcoin does, if it can surprise us a little bit. But at the moment, it's not looking that great. And then we got some support coming here right around 25,200, another point of confluence. So this is going to be a major level for me, guys. Like I said in my previous, the early part of the video, 22,500 is going to be a big level. Okay, I think that covers it for now. I don't have anything else really to add. I still think that Bitcoin's going to get a bit of a dip down before we make our next leg towards the upside. Weekly time frame looks very bearish indeed. You have a 15 here. Oh, sorry, let me get rid of this wave count. It's in the way. So we got a 15 and then now 14. Now we have a 19 on the weekly, and it's 3-day and 22 hours. So it's looking pretty bearish at the moment. I don't think that you're going to get a big moon up right now, unless, you know, you get a very big reversal in the markets. We do have PPI tomorrow, so things can change, but I don't think the data is really going to turn that much with just the PPI. Anyways, thanks for listening, guys. Hopefully, you know, the Fed doesn't raise rates too much. At the moment, the inflation came down to 4.9%, and Jerome Powell has signaled to the market that rates are going to be here for higher, right? Higher for longer, and there are going to be no rate cuts. So let's not fight the Fed, right? It's a very big saying in the market: don't fight the Fed. And right now, for some reason, the market is fighting the Fed. Before, the market was just floating with the Fed, but now that the Fed has pivoted, the market doesn't seem to like what the Fed's doing, and it's trying to force itself towards the upside, hoping that the Fed is going to pivot, and they were able to front run the Fed pivot. But as we all know, it is impossible to front run the Fed pivot. The markets need to come down first, and then the Fed will pivot, right? When the markets start to break down due to a massive recession, a panic in the market, you know, in the economy, then yes, I believe that is when the Fed is going to pivot. But for the time being, there's no signs of that yet. Markets take the stairs up, and they take the escalator down. That's the way it's been. And right now we've been climbing a long amount of stairs. We've been climbing it since October of 2022, right? It's been a huge amount of time, and it's just getting ready. It's getting ready for its next big leg down. That's what I believe. I know a lot of people are I was watching CNBC today, and Tom Lee was believing, we're getting ready to make new all-time highs. The bull market's back. You got to get into long positions now. You got a long. Get into longs. We're gonna go to new all-time highs, 5,000, 6,000 on the S&P. Who cares? That is just absolutely absurd to me. It's just insane. There's huge layoffs going on right now in big tech. Not only in big tech, it's probably affecting all the companies right now. There's a reduction in earnings, and rates have never been this high. Oh, okay. Anyways, that's enough for today. Love you all. Thank you so much for 21,000 subscribers. Peace.